Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly we're going to start with the Japanese shares. They rose on Wednesday after, of course, we saw the Bank of Japan announced it would modify its monetary policy framework. What we saw in the morning news that the central bank kept its deposit rate unchanged at -0.1%, but of course introduced a new policy of targeting the yield curve. While of course the central bank abandoned its monetary base, the BOJ said it would maintain its program of buying long-term Japanese government debts. So that the balance of it holding will increase by 80 trillion yen annually. And of course the currency market, we also saw a lot of volatility. The Japanese yen slipped as much as 102.78 against the US dollar after, of course, the announcement itself. That compared to an earlier high of 101.09 against the greenback. On Wednesday, of course, we're looking at a lot of other announcements from most of the central banks, however, likely offset that will dent in sentiment that is seen in morning session after the Japanese Ministry of Finance released before the market opened. Of course, that also report showed that exports of Japan fell by 9.6% on the year in August, sharply lower than the 4.8% drop which was expected by the markets. Tracking also the European stocks, over there rallied in the morning trade on Wednesday after the Bank of Japan announced new monetary policy measures and investors awaited the outcome of the US Federal Reserve's meeting. Tracking also the most important, the Pan-European Stock 600 Index, it was up about 1% later on Wednesday. The US Federal Reserve will become the focus of the market attention. Although we're not expecting any frameworks, as we're not expecting any rate hikes today in the central bank's meeting. However, the market odds of a rate hike for September meeting were just about 20% on Tuesday and close to 60%, which is very amazing for December. Against the dollar, the euro was down about 0.2% at 1.1133, with the British pound is actually steadying today in the session, as we saw it tumble in the previous session, extending to its losses after head of Germany's Bundesbank warned on Monday that the banks based in Britain could of course lose passporting access to EU markets after Britain's pending exit from the European Union. Sterling was down 0.2% this morning at 1.2958 versus the dollar after skidding to 1.2946. That was its lowest since August 16. Gold prices in the commodity sector lowered on Wednesday as the dollar rose after the Bank of Japan overruled its stimulus program, with investors turned their focus to the US Federal Reserve and its policy right now. Outcome of the interest rates later in the day. Gold fell 0.3% to 1311.43 an ounce in late Asian session, but of course erased those losses to trade at 1321 ahead of the European market open. Fed Chair Janet Yellen is scheduled to conclude the US Central Bank's meeting with a press conference at 1800 GMT on Wednesday after, of course, the release of the interest rate decision. Oil prices in the energy sector climbed this morning on Wednesday, supported by a report draw in US crude inventories and by firm import data from Japan. US West Texas Intermediate crude futures were up about 1.8% or about 70 cents at 44.80 a barrel. The main oil driver of the prices had been the American Petroleum Institute data showing that about 7.8 million barrels were drawn to 507.2 million barrels in US crude inventories, with of course the third weekly stock draw. That's about the most important news of today. Keep track on the Fed decision later on. I'll see you next time. Bye-bye.